Hey guys, good afternoon, everybody. Today is Wednesday, September 21st. It is 2 p.m. right now, scheduled time for a mentoring session. So I'm going to go ahead and set up this room real quick, and then we can get started shortly. Just give me a few moments to finish setting this up. And then we can get started with this session for this week. Set up there. That's good. All right, let me get this link sent out to you guys here in the premium. So I'll get a few more minutes for people to make their way in, and then we can get started shortly. Markup. Hey Kenny, how's it going? All right, let me see. I'm gonna mark up the hours over here just so we can look back at how the market moved from FOMC. So market opened over here at 6:30. Got off at 8 o'clock. FOMC happened here at 11. And you guys can see the movement there. Hey Patrick, how's it going? All right, so good afternoon, everybody. It is 2:03 right now. Our scheduled time for the mentoring session is 2 o'clock. So I'll get a few minutes for people to make their way in. I was just marking up right here the timestamps from market open up until the time we got off live at 8 o'clock, and then from there until FOMC. So if you guys look at it from this point, you guys can see like during our live session today from 6:30 to 8, there wasn't really too much of a direction. It was more so a huge range right here. Price pretty much ranged all throughout our session. It barely even moved too. If you look at the market from 6:30 to 8, it barely moved 1,530 pips. It's barely anything. Typically, it moves 1,500 pips or more easily. So it'll probably move like, a bigger range, like about 2,000 to 3,000 pips generally. And then it just continues to range from there over here during the post live session. And then obviously the huge crash, right, or not crash, but huge spike down right here when FOMC came out at 11 o'clock. Correction back upwards and correction back downwards right after. So it did exactly what we anticipated. So if you guys remembered from this morning, I mentioned that, the push up was basically like all the push up that we saw this morning wasn't going to hold. All the news today was all negative. There's no reason for it to go up to begin with. Everything was kind of pushing down. It was just getting propped up until the inflation news came out, which was going to come out regardless. We already knew it was going to be negative. There's no way it was going to be positive. And that's why a lot of people probably got faked out here. I could see a lot of accounts getting blown just between this period here, because you guys can see the range from this point. If you were trading around this area, price was ranging about 9,000 pips. So you got to have really, really wide stop loss to survive any of this here. You know, some people probably made a lot of money. Most people probably lost a lot of money, or blew their accounts. So this is why I recommended that people sit out of the market. There's no guarantee that just because, you know, the news is going to be negative that it would drop, right? You could have seen more manipulation, like something like this over here. Like if you were chasing this and price was dropping, you know, you could have gotten suckered into this right here. Like you could have gotten suckered into a sell right here. And then as price pushed up, I know a lot of people have tried to cash the retracement to the upside, but you'll see right here that it didn't retrace immediately. It actually came right back down. So depending on where you were trading, and if you got caught in the trap here, you could have gone stopped out either way. If you were chasing the sell, you could have gone stopped out. If you chased the retracement up, you could have gone stopped out too, because even this range down here was still about like 2,000, 3,000 pips. So that's why it's a lot better for you to just sit out of the market. I know a lot of people will say that, you know, they have their own idea of like how to trade news, but realistically, you can't trade news. I mean, you can trade it, but you can't really trade it consistently because there's no way to predict where price can go, right? Like you knew price was going to come down here. We already knew that. But how would you know if it was going to continue down or retrace, right? So some people will say that they would have taken a trade here, but they say it after it already happened. They can't say it before it happens, right? They say it after it already happens. They're like, oh, I could have done this, that, and the other. But realistically, there's no way they could have predicted that. Exactly, yeah. Peter said it's like roulette. 50-50 black or red, and then sometimes it's green, right? There's two green numbers, 0 and 0, 0. That's where you get screwed right here, because you can be betting either way, where you think it's 50-50, but realistically it's like 40-40 or even 30-30, because you have the two random occurrences where price can just go sideways or whipsaw like it did right here. So, you know, my advice to you guys is just don't trade news. I know a lot of people try to gamble news. I've done it myself. I've had success and I've had a lot of losses. So I don't think it's worth it, honestly. Because here's the thing, if you get caught in a spike like this and say you're looking for a buy, right? There can be slippage where your account or like your order won't get filled, and then you end up getting stuck in that trade. 1 second, guys. Allergies. All right, I'm back. So, all right, guys, if you guys have any questions, feel free to put your questions in the chat. I don't really have anything lined up here. I just wanted to go over the FOMC just to show you guys that you know, the dangers of trading high impact news like this. You know, after seeing it happen, it seems like a no-brainer, right? Could have caught the sell here. Realistically, a lot of people don't have the trade psychology to actually take a trade like this. Exactly, yeah. So Valentino over here said very risky unless you have a special news account, which I completely agree with. And I would never do it with a personal account, right? I would probably do it with an FTMO or something like that, where you don't have to worry about going past your slippage. But in a case like that, they typically won't let you trade unless you're doing FTMO, which they're okay with news. But most of the time, it's not very ideal. So if you guys have any questions, feel free to put them in the chat. You know, just a reminder, the session's for you guys. So whatever you guys need help with, whatever you guys need me to cover, you know, I'm here to help you guys out. I don't have any questions lined up. It seems like everyone kind of understands the SR rejection strategy, which is what we're currently applying. So I don't really have anything really to review, unless, you know, there's a trade you guys took, didn't play out right, and you want to see if there's anything that could have been done differently. We can do that as well. But at the moment, I don't have any questions. So I'll hang around, see where, and I'll check here on the higher time frame, so what we're looking at here. So price is realistically still within this area. You can see that it was bouncing around this area pretty much all day. This pink line right here is the line that Rick was identifying. It's right at it, actually. So we'll see where price goes from here. It's a pretty strong double bottom. We'll see when the market opens at 3 o'clock, because this could be a huge factor in the direction of price, whether price goes up for a correction, or if it breaks below and continues to tumble lower. My guess is that it's going to retrace a little bit. I don't think it's going to continue dropping right away. I think Asia session up until London, it'll probably correct back up a little bit, or it might just stay flat. So just something to, obviously keep in mind. So I'll hang around until you guys have questions. Otherwise, I don't really have anything to cover today. Yeah, Peter said medium impact news tomorrow. So let me check the news real quick. So for tomorrow, we have, I think, unemployment claims, right? Yeah, so tomorrow morning at 5:30, we have unemployment claims. That's going to be pre-market. That's going to hopefully push price one way or the other. I'm assuming that this is going to be negative. They're forecasting it to be negative. So it was 213,000 unemployment claims last month. This month, they're forecasting it to be 220,000. But it could be a lot more, because it seems like a lot of people are getting laid off, especially with the news that just came out from FedEx, how they're laying people off. Also, I think Goldman Sachs, they're laying a lot of people off as well. Everybody's getting laid off, right? If anyone's having a high paying job and they're not crucial to that company, they're probably going to get laid off or demoted. Because a lot of these companies are looking to cut costs, especially during this time period. We have another news event at 7 o'clock, CV leading index, and then natural gas storage at 7:30. So it looks like a lot of negative news tomorrow. Unemployment claims are forecasting it to be negative. CV leading index, they are forecasting it to be probably positive, but it's a lot of impact. And then natural gas storage right here, they're forecasting it to be negative as well. Typically, if the number is higher, that means you're not selling gas, so it's not better for the economy because money isn't going full circle. Other than that, I think that's about it for tomorrow. Friday's going to be another big day. Powell's going to be speaking on Friday. Powell did speak today at 11. That's kind of what caused the drop today. Not necessarily because he spoke, but they went over the increased interest rates. I was watching CNBC at the gym today after we got off the live, and I was just watching how the market was just crumbling. So we'll see what happens here. So my perspective for this right here, I'm going to just draw a couple of zones. My perspective here is that price is likely to either consolidate or correct back up even slightly. So there's not really too much here, but you can see that price is basically consolidating between these two zones right here, just going back and forth. My guess is that price is going to push above, retest, and continue pushing up higher. It's going to be a slow move, though. I don't think it's going to be a huge correction back up. I think it's going to be a small correction or a slow correction up until London. And then I think it's just going to prop up until tomorrow, because tomorrow we have a lot of negative news. So it's probably just going to keep pushing up slightly before it comes back down. Looking on the 4-hour time frame, as I mentioned, price is at a crucial price point. Let me just draw add a line there, but I will draw an actual zone. So as you can see right here, price is literally at that area. So here's where price was consolidating for a while prior. And now price has dropped to the next level right here. So we'll see what happens in the next hour. So market reopens at 3 o'clock. It's 2:14 right now. So in about less than an hour, we'll see where this goes. Let's see if there's anything else here. One thing that people have asked me in the past is typically what time frame would be good for long-term trading. From my perspective, the 4-hour is probably the best one, guys. And the reason for that is because each time the 4-hour candle closes, it's like opening of like a new session, right? So like if you go from this time right here So like, for example, well, it's not the opening, but there's like high volatility during that time. So like between 1900 hours and 3 o'clock over here, this is like the switch off between Asia session into London. So you can see how price kind of moves one way, and you can kind of predict where price is going to go, especially if you have structure built around it. If you guys remember the strategy I used to apply before, the K2SR, I forgot what it was called. I think it was just called K2SR, the 4-hour one. Yeah, the K2SR is a zone strategy. So like the way that this strategy would work, you pretty much could ride candles from zone to zone. So like, for example, here, and it works for all assets, not necessarily just US 30. I mean, I use this for Forex, but you can see something like this. So this is kind of what I was mentioning before, or I could draw the zones here. I'm just going over this because someone was asking about it the other day, because I know some people can't scalp or they just aren't good at scalping. You know, your other alternative is to trade intraday or swing, which you can do on the 4-hour. The only problem with this is that these zones tend to overlap a lot. And if they overlap, it's hard to trade, especially for US 30. US 30 isn't typically an asset that I would trade on the 4-hour anyways. It's just too big of a time frame, and the movements are like a lot bigger than you would want. There's just too many zones here. Like this zone here is way too big. Let's see. So I'm going to try to see where I think price may likely go. So price is still within the zone down here. All right, actually, there's not even a zone down here. I'm trying to anticipate where price is likely to go. Price hasn't been around this area for a while, so let's see. Next zoned area is going to be down there. Okay, so my anticipation is that if price drops below here, it's likely to, you know, these aren't even actual zones. I'm going to change these colors so there's no confusion. I forgot where we got these zones from, but we got them somewhere. And this is kind of similar to like how Kevin trades zone to zone. All right, so here's my anticipation. If price ends up dropping below here at 3, it's probably going to continue dropping to this next zone. It's likely to come and test it. Not even that far. It's about 2,000 pips. However, if price corrects back up, it's probably going to correct at least up to this candle. Right, so the same thing works like how we do on the 1-hour. Whenever you see a big candle like this, you can anticipate a correction. So if it does correct back up, it's probably going to correct back to the halfway mark, somewhere around here. Or it can correct back up to here. Obviously, I'm not going to play around with this market. This is all speculation. It's just kind of what I see happening. Price will either correct back to one of these points, or if it drops lower, target price point is going to be down there. It's really hard to tell because this candle is a news candle right here, right? So it's gonna be difficult to really predict the direction because we're also going to Asia session. So it could really go either way. Or what I'm guessing here is price will probably consolidate a little bit, might push up slightly, then just consolidate. then by tomorrow New York session, target price point is going to be down here, which is the weekly support there. That's all I can see from here. But all right, guys, if you guys have any questions, feel free to put them in the chat. Don't be shy. I know some of you guys have questions and you guys are just scared to ask. If you want to ask here on the chat, just send it to me through Telegram. But yeah, the session's pretty much going to go for as long as we have questions. If we don't have any questions, we're just going to wrap it up, unfortunately. But I'm here to help you guys out. So whatever questions you guys have, drop them in the chat. Otherwise, we will see what's next. Let's see, Maddie said, "What's up, Sean? I'm at school and bored as shit, so I'm here." Are you at actual school, Maddie? Are you online? Keep forgetting you're still in school. Oh, you're doing some schoolwork. You're at school doing some work, couldn't focus at home. Nice, nice. Yeah, I know you're in your last semester. Yeah, no, same here, bro. Peter said Maddie probably makes more than the teacher. Exactly, right. That's what so if you guys what was his name? So you guys know Ray Dalio, right? I forgot what his last name is. Ray Dalio. Sorry, I don't know why I said Dalio. Yeah, Ray Dalio. So if you guys listen to his book, I'm like listening to his new book. That's literally what happened, Peter. He was like, I think at Harvard Business School, or he was at some school, and he forgot if it was him or if it was Warren Buffett. It was one of the big traders or whatever. They were like in business school, and then they realized that he was. I'm pretty sure it was Ray Dalio or Dalio. He asked his professor, or his professor told him how much money they made, and when he realized he was making more money than professor, he was like, "Fuck this! I'm just gonna trade." Yeah, I've been listening to his book. His book's pretty good. If you guys have issues with like trade psychology and stuff, his new book, I think it's called, what is it called? Principles. Yeah, Principles. This book. Currently listening to his book right now. It helps a lot with he basically gives you an insight into his thought process, and he just has principles when he trades. That's what made him like one of the most profitable traders like in the world. I don't know if he's still like the top 10 richest people in the world, but I know he's been up there. So if you guys ever need help with like trade psychology, if you guys already read Trading in the Zone, I think this is another good book. And Ray Dalio he's an actual trader. So he trades similar to us. He trades with principles, right? Like for us, we have our requirements, we have our steps that we follow. And that's what keeps us consistent, right? If the steps don't line up, if the requirements don't line up, then there's no entry. Same with him, right? Except he does algorithms. So he does the same thing as us, but he just automates it. So he can take away the trade psychology issue with trading. So yeah, I know a lot of you guys have been asking me what kind of books to look at. That's the book that I'm currently listening to. I don't necessarily read books. I listen to audiobooks. So if you guys want to listen to his book, you guys probably message me. I have like free credits for Audible. So if you guys don't have an Audible account, or if you guys haven't had one in a while, you can get a free audiobook, which you can use towards that book there. It's a really long book too. It's like 15 hours, I think, or more. Okay, question from Kenny. Kenny's asking if you can go over the SR zone. So what do you have an issue with the SR zone? Kenny, is it drawing the zones, identifying the zones, using them? Like what specifically? So I can focus on like what you need help with. If you have an issue like identifying them, or if you have a specific strategy, because I'm not sure what your question is for specifically, because you're asking, can you go over the SR zone? But I'm not sure if you're talking about the strategy, if you're talking about just the zones in general, the indicator, how to draw them, etc. So if you could be a little more specific, I can dial in on like what you need help with. But I just need to figure out what you need help with to begin. So I'll wait for you to respond, Kenny. Indify. I think you mean indicator, right? Or are you trying to spell indicator? So for the indicator, do you want me to explain like what it does, or I just need a bit of a more specific question, Kenny. So just if you could give me a more detailed question, like, can you go over the K2SR indicator? Can you go over the K2SR zone? Because you put in diff. Oh, how to identify it? Okay. Sure. So I'll go here to the clean chart. I'm going to turn on the K2SR version 2 indicator. Make sure that your settings are set to show body levels like this. And this is how you identify it. You just turn it on and it plots it for you on the chart. So is there a specific thing that you're confused with, Kenny? Because when you turn it on, it pretty much does it for you. So you don't really have to identify anything. It's on the chart already. Kenny said, sorry, you can't spell it. No, you're fine, Kenny. So is your issue here like figuring out what the zone is? Because when you turn on the indicator, the zone's already there. So you don't really have to identify anything. The zone's already at that point. Is there an issue with like when they overlap, or is there an issue with I just want to zone in on like what you need help with, because I don't want to go off topic and then it's kind of pointless, right? Because it doesn't really go towards what you need help with. But identifying the indicator, you just turn it on and it identifies for you. You don't really need to do anything after that. If you're asking about like how to draw your own zones, what I do is I use a rectangle tool right here, and you just outline the zone there. Kenny said, oh, I don't have the top K2 level yet. Sorry, Kenny, I'm totally confused. You said you don't have a top K2 level yet. What do you mean by that? Sorry, I'm just totally confused. Are you saying that you don't have the indicators, or are you looking for something? Let's see. Oh, okay, Kenny, I see. Kenny said I don't have the indicators yet. Yeah, so it's going to be hard for me to explain to you how these zones are produced, because the thing with this is that my algorithms that create these zones here is that it creates a zone where price has been tested before in the past. Like it's been tested at the same exact price point in the past. So let me just show you here. And this is something that you probably won't be able to do, Kenny, because it's not an easy task to do, because you have to like literally look at the entire chart. And this goes across all time frames. So let me just see if I could. Okay, so you can see right here that we have a zone, right? You can't see, like, you can't just look at it from the one minute. If I go on the 10-minute, you still can't see anything there. Go on the 1 hour. So here you can see it a little better. You can see where price was tested. So we drew the zone over here, and you can see the last time this area was tested was back in July 2014. I mean, July 14, 2022. So this is how these zones are created. I think this might go like way over your head. So I don't think you're going to be able to do this, because you have to be able to identify where the support and resistance is, right? And it's not simple. It's not really that easy unless you know how to really do it. Because what a lot of people do is they do a top-down analysis. And it's easier to see like here on the 4 hour, because that's where price is currently at. So price is right here, right? And you can see where it tested it over here on the same date. That's how you can identify support resistance. it's not going to be an easy task for you because you don't really have the, I guess, foundation, unless you know how to identify support and resistance, then you know you can do this yourself. It's just that this indicator here, it produces it for you. Do you kind of get what I'm saying, Kenny? So I can't necessarily teach you how to identify support and resistance because, well, I can teach you how to identify support and resistance, but I can't teach you how the indicator does it because the indicator goes on an unlimited time frame, right? Like we trade on the 1 minute, but these zones over here, you can't really spot them unless you're a freaking wizard or something, right? Because you got to go like on every time frame. Like you got to go on the daily. And I mean, technically you could do this by hand, but you can see how difficult it is, right? Because you'd have to go look for where price tested from. So like if you were to do this by hand, like, yeah, of course you can go down here and you'd be like, okay, price tested this area. Price tested this area. And then it just keeps going down further, right? And then the more times you get it tested, the stronger the zone. So the way that this indicator works is that I have an algorithm that I've developed, which plots basically like, what it does is it does a calculation where it identifies where price has been tested a lot of times in the past. If you look over here, it's been tested like a bunch of times, right? All throughout the years. This is back in 2020, 2021, etc. Like it's not really as easy for you to identify by the naked eye. I mean, if you wanted to do it by naked eye, you'd have to just go on the 1 minute, or what you can do is you can go to like the daily. But this is going to take a ton of practice because it's going to be really difficult for you to identify. Like for example, here, you can see a lot of these areas got tested right here. So this tests around this area. What you can do typically is you can just see where the price gets tested a lot, like something like this. And then you can see that this is where an area where it gets tested. Where it becomes difficult is that when you go in the lower time frame, so you go from the daily to the 4 hour, you're like, okay, it's still being tested around this area, right? Still a strong zone. And then it gets tighter and tighter. So as you go in the lower time frames, the 1 hour, or here, I'll show you like a way that I used to do it like way back. So you go in the daily and you just identify high lows, right? So you'll go over here and then you'll go identify the high lows that happened, I guess, somewhat recently. So what you'll do first is you can go here and draw something like this. Like before I created the indicator, this is what I used to do by hand, but it's not easy because you have to keep updating it because, the zones change, obviously. So you just look for areas here where price is tested, right? So you can kind of see this is a high. And then this is the low down here. There might be another low right here. You go from the daily, go down to the lower time frame, 4 hour. You're like, okay, where is it tested again? Possibly right here, right? 2 hour. And you just go on the top down analysis. So you can see how you can mess this up, right? Because everything looks like a zone. And it just depends on like what you look at. Like my support resistance or my zones here can look completely different from yours. You go down 30 minute, 15 minute, 10 minute. See, and then here you can get down to even tighter zones. Like that there. 5 minute. Just go back to see if price has tested this area before. Not necessarily. 1 minute. And then you can see from this point, it's a huge mess, right? You can get the higher time frame zones here, but it's a mess because you don't know what's important. If you turn on the K2 SR indicator, you can see that it's already plotted these here because it has the data already plotted for you. So instead of having this big zone that's kind of not chopped up yet, you'll have the zones already marked up for you here. So, I mean, if you want to learn it, Kenny, you can, but you're not going to get this overnight. This is probably going to take you like years and years to develop. That's the whole reason I created the indicator, because it's not an easy task, especially if you have to go and update it yourself every day. Like that's the good thing about this here. So let me just go back real quick and I'll show you guys, real time how this automatically populates for you guys who do not have access to the indicator. So I used to do this by hand every single day, and it was just annoying because it's impossible to scalp if you have to do this by hand. So if you were to go forward from this point, so you guys can see here, these zones will produce, then they'll disappear, and they'll just continue to repopulate. So you can see how price is below this point. All these zones pulls data from basically as far back as the chart goes. As much data that's available on this chart, it'll go back as far as possible, and then it'll plot these high lows, or I guess support and resistance, wherever they've been retested in the past. Typically, when I first created this indicator, I made it pretty low. So like if it tested twice, it was okay, but I wanted really strong zones. So what happened is I made it a bit stronger, and now it has to test about like 4 or 5 times at the same exact price point. Basically, the reason I created this indicator was to identify where the algos are trading, right? Because the banks and institutions use algorithms to trade. So what I did was I needed an indicator to identify exact price points where price was testing. And that's how I came up with this, because I wanted to understand where I should be avoiding trades and where should I be taking trades. So like basically before I came up with the sessions and the red flags and stuff like that, I used to avoid these areas here because you can see where price gets a little choppy, right? But what you can do from this point when price breaks out of it is you can trade zone to zone. So one thing that I'd be looking for is if price breaks below this point, I wait for it to push below here. Let's see if it happens. So it hasn't broke below there yet. Fake out, fake out. Here goes price finally below. Let's see if it actually makes it to that next level below. Further. And it doesn't, it's a fake out. Again, right here, makes another attempt. And then it finally makes its way down, right? So if you guys remember this area over here, there was actually a zone that was there previously over here. So we had the zone over here. And as we move forward, that would be the next target area. Breaks below that point. Doesn't necessarily drop all the way yet, but eventually it makes its way exactly. So you can see the zone here I drew from like way back. This is from September 15th up until September, same day. It's just later on in the day, came exactly to that same level. So if you guys have heard me say during the mentoring, or not the mentoring session, during the lives, these indicators are very strong if you know how to use them. For people who like to trade zone to zone, you can draw old zones and then just leave them up so that when price does come down to that point, you know exactly where it'll bounce from, or where the target price point would be. Right, so like, let me see if I can find another example here. So price pushes above this point, or if it pushes below, okay, so price is pushing below. I'm going as far back as I can. I don't see any areas for it to come back to. But typically what you can do is you can draw zones around these higher points. So if there is a correction, you know what to look for. And this works the same as, oh, and you can see it happen right there, actually. Okay, so price was like way down here. You can see that there's a zone from like way up here. And this goes hand in hand with liquidity. So if you guys know how to use the high lows, you'll use that in conjunction with the SR levels. And if you're ever looking for a buy here, you already know that your target price points are going to be around this area here. This is where it comes in handy for the high lows, because if you mark up the high lows as well, this will help you understand where price is likely to go and where it's going to continue pushing. that level right there and on to the next level there. And you can see where it comes right back down. Yeah, no, definitely, Kenny. Yeah, once you have them, it's going to make things a lot easier. So, all right, if you guys have any other questions, feel free to put them in the chat. I don't have anything else to cover today. I'm just kind of rambling and I'm going off like things that I see on the chart. I was hoping to see, I was hoping to see if we could find, or we could see where price is going. However, market still isn't open yet. It doesn't open for another 20 minutes. So if you guys have any questions or want me to cover anything specific, just let me know and we will see what needs to be covered. Otherwise, this is kind of where I see price going. It's going to come, or I mean, I don't know if it's going to come down there, but this is a weekly support. Went on the weekly chart over here and I identified where the nearest low is. So this is the weekly chart here. Let's see, question from Eric. Eric's asking, Sean, have the markets changed a lot from when you first started trading versus now, or versus 5 years ago? Are you still using the same strategies now as you did back then? Or are you constantly coming up with new strategies to adapt to the market and stop using old strategies? So I don't necessarily, well, so let's just go in order. So your first question was that whether the market has changed a lot from when I first started trading versus now. So the market has gone through a lot of changes due to what's been going on in the world. I wouldn't say it necessarily has changed, like completely changed, right? I think the market from when I started trading about 5 or 6 years ago versus today is similar. So you got to take into consideration like COVID, right? COVID kind of affected the market for like 2 or 3 years. That made the market move way differently. That's something that you couldn't really predict because we didn't know what was going to happen in the market. Everyone kind of went into a panic. But from pre-COVID, this is pretty normal, like summer into fall. The only difference with this here is that we have another world event, right? We have a recession. So I didn't trade it in the last recession. I mean, I don't know how old was I? I was like 18, I think, in the 2008. Yeah, the 2008 recession. So I wasn't trading back then. So I don't know how the market was moving during that recession. But from what I've heard and from, different analysts, it's kind of similar. It's just similar, but it's not as drastic. Like in 2008, the market like literally crashed. It just went through the floor. And that was because a lot of other things were affecting the market, like the housing crash and stuff like that. But with regard to, sorry guys, the dog's scratching. Cody, stop scratching. All right, so the market from pre-COVID, sorry guys, 1 second. Sorry guys. So the market pre-COVID is kind of similar to how it's moving now. As we do go into the recession, I don't think it's going to be a drastic drop. Let me see if we can even go back to that far. So let me just take everything off the chart. Let's go on like the monthly chart. I don't know if we could go back to do that. No. The farthest it goes back to is 2017. Let's see if I go on different data here. Let's see. Velocity 8 cap. No, I don't think they're going to have anything here. Maybe Wanda. No, farthest they go back. Or actually, you could see right here. So here is, and I'll just highlight areas here. So this is basically the 2008 crash. The market literally dropped like, so 7,000. It dropped like 70,000 pips. This is like the market crash in 2008, right? This is COVID, very similar. But here's the thing that you have to keep in mind. The market now is super propped up. It's been propped up for like the past couple of years. COVID was like not even close to how much it dropped here, but you can see how this is the market crash during the last recession, the last like real recession. This is COVID where people panic, market still kind of crashed too, but not as much as this, right? You can see the similarities from here to the 2008 crash, right? It's kind of similar, but it's not like a drastic drop. It's not like just a huge drop. If it drops this much, it's going to be, well, we're actually getting close to it. It's just not a drastic drop because you can see from here, price just kept dropping. They just consistent drop down. With here, price will drop, then it'll retrace, then it'll drop, then it'll retrace, then it'll drop. Here was just a straight drop. So I can't tell like exactly how the market was moving, but just looking at this from here, it looks pretty similar. So if you look at the markets, how it's changed, this is a recession, it dropped. Every other year after that, 2009, consistent push up, retracement, continued push up, retracement, continued push up, retracement. This is like normal market, right? Continuation to the upside. COVID happened, market dropped, then correction back to the upside. Here's the same thing. It's the same thing happening here. We're probably going to be in this recession for like the next year or so until it flatlines and then it corrects right back up. So and I started trading around, when did I start trading? 11 years ago. So today's, so 2001. Actually, no, 2012. So I started trading around here, like out of college, and I was just buying stocks. Like I was doing finance, I was just buying stocks and stuff. And you can see here that the market hasn't really changed much, right? It's been more volatile. So it was a slower move here. It was easier. And the thing is, when I was trading during this time, I started trading stocks. I wasn't necessarily trading US 30. So it wasn't as erratic, but you can see the difference between 2012, 2013, 2014, pretty similar. And then if you want to go 5 years back, like I mentioned, price was pretty much moving the same here, kind of choppy, but it was moving the same. Big drop right here during COVID, and then continuation just moving how it normally was. So the market hasn't necessarily changed too much. It's just whenever world events happen, like COVID happened here, and then the Ukraine war happened. When was it? Right here in April. I think it was April. So whenever world events happen, you'll see some weirdness happen in the market. So normally it'll go up straight, not necessarily straight, retracement, straight, retracement, straight, retracement. Right here, huge drop because of COVID, straight, retracement, straight, retracement, straight. And then the Ukraine war over here, again, some uncertainty in the market, price dropped. And then from there, we went into a recession, or I guess recession that hasn't been confirmed yet. But I mean, realistically, if you compare this to 2008 over here, it's the same thing. I mean, it's moved about the same amount too. So I think recession started maybe around like summer. Like maybe. So if we're going to match the recession of like 2008, price would have to drop a lot more down here. We just won't count this because this drop over here is due to the Ukraine war. And then this right here is where the recession started to really kick in. So in order for us to match the recession of 2008, price would need to drop another 40,000 pips, which is a lot. We're probably not going to see that anytime soon, but probably throughout the rest of the year and then into the next 2 years, price will probably get to this point. At that point, then maybe we'll see a bounce right back to the upside. But short answer to your question is no, I haven't really seen much of a change if you're comparing pre-COVID right here to current market. It's just that pre-COVID market was going up. Now market's going down because of the recession. So nothing's really changed too much. And then to your second part of your question, you're asking if I still use the same strategies. Yeah, so I'm still using the same strategies. Nothing's changed really too much because the strategies that I've produced are mainly based off momentum, right? So it doesn't really matter where price is going. The only difference is that when price is going sideways. So that's where I started to introduce the K2 SR rejection, because I identify that helps during choppy conditions. The thing is, when the market's moving directional and it's trending, it's very easy to make trades. Like for example, here, this is a one month chart. I'll show you the very first strategy that I created, which was the K2 intraday strategy, right? So, I mean, typically you want to apply this on the 1 month, obviously, but if you were to go on something like, I want to put it where it's like, you can still see the difference. Let me see how far we can go here. 1 week, let me go on the 4 hour. I think 4 hour would be fine. Let me just delete this real quick. Okay, so let's see how far we can go back on the 4 hour. And I'll show you how the strategy still worked perfectly fine. Okay, it goes back to 2018. Okay, so if you look at the market here, you can see that, so this is today's market, right? Today's market right here, the very first strategy that I ever created, which is the K2 intraday strategy, still works perfectly fine. So right here, we basically, all we're doing is we're matching the momentum with the trend meter, right? So the trend meter down here is red. You have red momentum, full TP right there, right? And I'm just showing you this as an example, not necessarily that you should be using it, but because we are in a choppy market. But I just want to show you that this worked here in 2022. Let's go to 2021. It works over here, right? You get green momentum, green trend meter, full TP. Green momentum, green trend meter, full TP, right? So the only difference with the strategies now and the strategies that I guess I initially started with is that they work during different market conditions. More so like in the summer and holiday season. So like in the summer market's choppy, you want to use something that works for a choppy market. These strategies don't work as good during choppy markets because these are all momentum based, right? So if there's no momentum in the market, there's no volatility, these strategies aren't going to work well because price is just going to be going back and forth. But I'll show you another year. So this is 2021. Let's go to 2020. All right, here's 2020 over here. Same thing, right? You have a green momentum, green trend meter, full TP. Another one right here, full TP, and so on. Sell entry right there. And I'm not sure if you've learned the strategy, Eric, but you can see here that it works. You know, I've gone over 2-3 years already. We went to 2022, 2021, 2020, 2019 right here. And we can go back even further. We can go back even really far. So let's go back to January of 2017, right? Same exact strategy. Green momentum, green trend meter, and it still works. So I'm just trying to show you an example that like the same strategies work. If you want to do the momentum pullback, it works just as good. Momentum pullback right here. This was like the second strategy. So the strategies that I've created, they're all very similar. If you look at them, you know, if you look at the requirements and you look at the entry points, a lot of the entries line up. So they're different strategies in different ways, but realistically, you're trading the same direction. So there's a couple criteria that I use with all the strategies. So criteria for our strategies. If you look at all of our strategies, they all fit the same criteria. It's just different entry points. So for one, you want to confirm overall bias, long-term, short-term, time frame trading on. Second, you want to confirm momentum or direction. Confirm red flags. I mean, that's pretty much it. Like if you look at all the strategies that we apply, Eric, it's literally the same thing. We're confirming the overall bias. You know, there's different ways to do that. You can use the K2 pivots. If you want to use the K2 pivot strategy, you can do that. If you're using a snipe strategy, it's the same thing. You're using the same analysis. It's just that entry points are different. And use the K2 trend meter, right? So there's ways to confirm overall bias, ways to confirm short-term bias. confirm momentum. You'll see some strategies will look for momentum indicators, like in the actual direction, and other strategies will look for retracement. So there's just different entry points, but they're kind of like the same thing. Like if you ever looked at our triple confluence strategy, those are three strategies that align on the same exact candle, right? It's like basically the same exact strategy. It's just you're looking for different entry points. So that's like a pivot scalp. So like, for example, here, if you were to apply a triple confluence here, you're basically applying the same criteria, but you're using other confluences. So like, for example, where's the high low at? I would have to replace like something like this right here. So if you were to apply the strategy here, you're basically using the same criteria. Confirm bias, right? You have the uptrend right here. Trend meter is green, price is pushing up. Let me just show you an example of like how these strategies line up. Okay, so like this one right here, right? This right here would be considered an intraday entry, right? Because the momentum signal is green, the candle is green, trend meter is green. That's one strategy there. The second strategy is that it's a pivot scalp. Price is above the pivots, and we have a buy signal right here, right? That's two strategies. Third strategy is you have a high low right here. So this is a high low entry as well because price continues above it. So it's literally the same strategy. So if it doesn't matter which strategy you're looking at, whether you're looking at the pivot scalp, you could have taken it. If you're looking for an intraday scalp, you could have taken it, or intraday, normal intraday entry. If you wanted to take a high low entry right here, you could have taken it. If you were looking for a K2SR entry, you could have taken this too. There's probably an SR around here. Yeah, exactly. It's right here. And it falls under the same exact candle. So I can list all the strategies here. Strategies that fall under this same entry candle. So one, K2 intraday strategy, K2 pivot strategy, K2 high-low strategy, or K2 SR strategy. And there's no SR rejection here, but it's about 4 different strategies, 4 out of maybe like the 7 or 8 strategies we have, they all line up on the same candle. So so just like you mentioned here, let me just go back to your question. So yeah, we're technically still using the same strategies. It's just on a shorter time frame. When I first started trading, I used to trade on like the 15-minute, 30-minute, 1 hour, even the 4 hour. But I just don't trade on those time frames anymore because I don't like being on the charts all day. Like if you're trading on the 4 hour, you have to be on the charts literally all day. I mean, or at least every 4 hours. Like you can't just like take a trade and then be done for the day. You take a trade or you'd analyze and then you wait for the setup, and that would literally take your entire day. So the only difference is that I'm applying the same strategies just on a shorter time frame and on a different asset. Before I was mainly trading Forex, but now I'm trading just US 30 because it just fits my schedule of how I want to trade. But I mean, you've seen other people in the group, they apply the same strategies during nighttime Asia session. Sometimes I even do it myself, or in other cases, London session for our traders here who are located in the UK. So going back to your questions, I'll just reiterate. Your first question was asking whether the markets have changed a lot. Not necessarily, aside from the world events that have been happening, COVID, Ukraine war, now the recession. But for the most part, summer was pretty much the same how it's always been, slow and choppy. That's how it is every year. It's pretty much the same. The market moves in seasons. Fall is quick, highly volatile. Winter it's a mix up. So like we have a lot of holidays in the winter, so it's good up until like Thanksgiving, and then it's good right before Christmas, and then it kind of just slows down because a lot of people aren't trading during the holidays. It's similar to summer, and in the spring it picks up because a lot of people want to make money before summer, and then summer is just how it is every year. It's choppy. So from my experience, I think that the K2SR rejection strategy is like one of the prime strategies to like really master, because most of the time the market is ranging or consolidating. So if you can master the K2SR rejection, you can pretty much apply that strategy all year round. These other strategies, they do apply at some points during the year, but not all year round because the market isn't always trending. So first part of your question, market hasn't really changed much. It just depends on what's going on in the world. Second part of your question, you're asking if I'm still using the same strategies, and yeah, I am. I'm not necessarily coming up with new strategies. I'm just making small changes to the strategies that we already apply to adapt to the market conditions. So like the K2SR rejection that we've been applying now, it's very similar to the K2 snipe strategy. So if you haven't seen that before, that's one that was applied on the 10-minute, but obviously if the market's choppy, you can't really apply it on the 10-minute, right? Because you're not going to get those smooth movements. So the K2SR rejection is literally just the snipe strategy. Let me see if I can pull it up here. It's a snipe strategy minus like all of the other requirements. So obviously, we confirm the overall bias. We typically do that as well. Confirm wick rejection off any K2 pivot. We don't apply that. Confirm wick rejection off K2SR zone. We do apply that. Confirm wick rejecting off K2 pivot does not touch candle body. We don't apply the second requirement, so this doesn't apply. And confirm you're trading the direction of momentum. So literally everything here is the same. The only thing that you're not looking for is the rejection off the K2 pivot. So the snipe strategy is essentially the SR rejection with less requirements. So yeah, we're not really applying anything completely different. We're just making little changes to our strategies. Like for example, here, the pivot scalp strategy or the pivot strategy, this is literally the intraday strategy. The only difference is that you're not using the trend meter, you're using the pivots, right? But you're still identifying the trend, it's the same thing. So the intraday strategy, you're using the trend meter, no pivots. It's like that, or sorry, it's like that, right? You're just using these two. And if you're using the pivots strategy, you just take off the trend meter. So it's essentially the same exact strategy. It's just you're using different requirements. The only reason I changed these up is because throughout the years or throughout the whole lifetime of K2, for some reason people will get confused with applying this. So I try to make it as simple as possible. So for some people, they like to see these lines here. So that's why I created the K2 pivots. For some people, they just like simple things, right? They like to see the green down here and see matching colors. So I didn't really change much. It's just you're looking for different requirements, or you're making the strategy a little more complex to fit the criteria. So yeah, I think that's for all your questions there, Eric. If there's anything that I missed, just let me know. But I think for the most part, yeah, I've never stopped using the old strategies. I just don't really apply them as much because they're all the same. It's just they use different things. Because for the pivots, you're still identifying trend. You're just using the pivots. And then same for the intraday. You're still identifying trend. You're just not using the pivots. Like you can literally just have one pivot up, like level 4. And it's going to be the same as the trend meter down here. So you can see when price comes below it, it turns red right here, right? Price comes above it, it turns green. Price comes below it, it turns red. Like it's not really a big difference. But if you use two together, it gives you a stronger confluence and you start to see things a lot better. So that's why I created these indicators, which are slightly different, but they're utilized to improve the win rate. Because that's our main goal here, right? Our main goal is to win and not lose. But all right, I think that's it with your questions there, Eric. Next question's from Kenny. Kenny's asking, yeah, no problem, Eric. Question from Kenny. He's asking, hey, Sean, how long will you keep trading before you decide to retire from trading? Fahad said you need a lot more before you retire, Sean. Also, we need a lot more before you retire. Yeah, I don't think I'll ever stop trading, Kenny. The schedule that I trade on isn't a really difficult schedule to follow, right? I mean, I'm just like, I only trade for an hour and a half, so it doesn't really take too much from me. It's not like I'm going to an actual job where I have to be there for like 8 hours and stuff like that. We might be cutting back on like the group mentoring sessions at some point because, yeah, of course, I'm going to want to have more time as we progress, but I don't think I'll ever retire from trading. I mean, I could be old as hell and I can still trade, right? because we have requirements here. You know, like Warren Buffett or Ray Dalio, like I mentioned before. Like, how old is Ray Dalio? He still trades, right? Ray Dalio, let me see. He's like one of the most successful traders in the world. Ray Dalio, he is, how old is he? He's 73 years old. He still trades. So I don't think I'll ever stop trading, Kenny. You know, this isn't really a taxing job, right? Where it really takes a toll on your health. I mean, unless you're losing all the time, then yeah, of course it's gonna stress you out. But let's see who else. Warren Buffett, right? How old is Warren Buffett? To do like 100? See, Warren Buffett is 92 years old. That's crazy. He's 92 years old. He's still trading. So yeah, I mean, you can do this your whole life. You don't, isn't like if you have a setup like, or you know, a routine like I do, because I still put health as like as a priority, right? Like I still go to the gym every day. So I mean, as long as I'm alive, I'll keep trading. I don't really expect to stop, because it's fun. It's fun for me. And since I don't have a normal job, like I don't have coworkers to talk to, or I don't have people to hang out with, right? Like on a normal basis, like if I'm working at a regular job. So hanging out with you guys is like working a normal job. It's like, except we get to kick the shit all day. It's not necessarily doing work. We just trade in the morning, and then we hang out during these mentoring sessions. And yeah, so I don't expect myself to ever stop. Let me see if there's anything else over here. Madhu's asking, by any chance, do you know the criteria or how Maddie determines which candles not to take or which to take for the continuation strategy? So Maddie's not here. You just logged off. So what I see from Maddie is that he trades in the direction of the bias, right, Madhu? So today he was looking for sells. The criteria is basically like something like he looks for the direction of, let me use a different chart actually. So he looks for the direction of price and momentum, and he looks at what the trend is identifying. So like, for example, right here, from this area to this area right here, he's mainly looking for sells, right? Because you can see the trend meter is red, price is below the pivots. This indicates a strong downtrend. So he's basically applying this here. So for example, we have a sell momentum, and he looks for the sell momentum as well. So basically from this area to this area right here, he's looking for sells. I don't know exactly, so you might want to ask him, like you can just message him and he'll probably give you the same thing, because I don't apply the strategy, so I don't know for sure. I'm just kind of giving you like my thought process of like what he does when he trades this. So like, for example, right here, he looks for the direction momentum, he looks for the trend. So price is trending down right here. He has a sell momentum. He sees a double body right here. This is the criteria for what he's looking for. He looks for a V1 double body rejection, and then he writes that down for a quick 100 pips. This is a really risky way of trading though, so just keep that in mind, Madhu. Like Maddie, he's just like really disciplined. Like he'll only do this if it aligns with my analysis. There's one right there. There is another one right here. And what he looks for is he looks for the double body on the top side. So if he's looking for a sell, he's looking for the double body on the top side. That's another thing. So for example, like right here would have been one, but he wouldn't have taken this one right here. If the double body's on the bottom, he wouldn't take that. He's looking for the double body on top because he's looking for price to come up and then establish a high. That's why he sees the double body on top. Again, right here, price comes down, comes up, another double body on top. And I mean, it's like back-to-back wins right here. Another one right here. There's a ton of wins. And this is late in the session too. Another one right there. Another one right there. There's like 4 of them right here. Another one right there. And another one right there, like right below it. So there's like 1, 2, 3, 4, 5, 6. He basically looks for the strong trend. Looks for double body rejection on the top side. For the sells, for buys, he looks for double body rejection on the bottom. So here's another one right here. So see if I can find one over here. No, there wouldn't be one here because there's no buy signal. But you kind of get what I'm saying here, Madhu. So that's basically what he looks for when he's looking for sells. Let me see if I can find the opposite for buys. Okay, so right here, he is looking for buys. Trying to see. I don't think he'd be looking for buys here. This is from today. I don't think he was looking for buys at all today. He was looking for sells. He still tries to trade in the direction of overall bias. So he still uses my analysis to determine what the overall long-term bias is. And then he aligns that with his short-term bias, just looking at the trend. Because I don't think we were looking for buys here at all today. So I wouldn't even, I wouldn't even entertain it. Maybe yesterday, but not today. But here's another example of like one that he might have taken if he was looking for buys here. Green momentum, trend mirror is green, price is above the pivots are angling upwards, bullish trend, double body right there, rejection off the bottom side. And he would have taken that for a buy right there, full TP. Medusa, I think so. Is he taking it after the green candle or? I mean, it doesn't matter what color it is. Medu, he's just taking it when there's a double body. So I mean, it could be red or it could be green. Like, so for example, right here, right, there's a double body. It's green and then it's red. I mean, it's red and then it's green. He takes that right there. So I think you might be like adding another requirement to it. All he's doing for buys is he's looking for a double body rejection on the bottom side. If he's looking for sells, he's looking for a double body rejection on the top side. So it doesn't matter what color it is. Because right here, it goes from green to red, inner, green to red, enter, green to red, enter. Yeah. So well, basically, if you're looking for sells, you're looking for a double body on top. If you're looking for buys, you're looking for double body on bottom. But it doesn't really matter what color it is. I'm trying to look for an example here where it's different, but for the most part, it's okay, so here's an example right here. So typically you'll usually see green or red, but right here it's red to green. So red to green, and then it works there. But again, this is Maddie's strategy, so you can probably ask him. But from my experience and from what he's told me and showed me, I'm pretty sure this is what he's looking for. Because I remember like during the live session today or yesterday, I was looking at an entry, but it didn't match. Like I was looking for a sell, but it was a double body rejection on the bottom. And he was like, no, it's not an entry because it has to be from the top. So I think it's the main different criteria between what he uses. Let me scroll up real quick. Fahad said, oh yeah, thanks Fahad for that. Let me change this back to currency.com. Thanks, Bob. I appreciate that. All right, let me scroll down further. Kenny said Warren Buffett probably has his assistant to take his trades from. The thing with Warren Buffett is that he doesn't necessarily trade like we do, right? He's an investor. So I don't know if you've seen his documentary, Kenny. You should probably watch it if you haven't. If you guys haven't watched it, it's a really good documentary on Warren Buffett, like how he how he became rich, right? He doesn't trade like we do. What he does is he typically buys into a company, and so he'll identify a company that's not doing very well. Like I forgot what he bought. What did he buy? Like Boeing or something. So he'll buy a company. Well, he won't buy it, but he'll buy a bunch of stock in that company that's like doing horribly. He'll go into the company because he has so much stock where he can make all the decisions, and then he basically changes uh how they operate, right? To make the company better. And then when the company goes back up, that's where he sells. He's not like a regular trader. He's not like buying low and then waiting for it to go up. He buys low and then he controls the company, makes the company better, and then it goes up and then he sells. So I think a lot of people get that mixed up with Warren Buffett. They think that he just buys stocks low and then he makes money that way. He actually goes into the company and makes the company better, and then he sells because he has like a deciding factor whether the company does well or not. He's not just hoping and praying that his stock's going to go up. He actually goes in and does the the heavy lifting to bring the company back up. So let's see. B said V1's on gold on 1 hour, 4 hours seem really good. Got a lot of winners, other time frames too. Having a lot of success taking them when they match pending different time frames. Nice. Yeah, I haven't really traded gold, so I'm not sure. And I'm not going to trade gold because last time I traded gold, I freaking blew my MFF. Remember, guys? So yeah, it probably does work well in gold. Like I don't doubt it. But let's see. Yeah, because I accidentally took too big of a lot size and it blew my freaking MFF account. Because I have my MFF times 100. Now it's similar though, so it's not a big deal. But I did blow my account on accident a couple months ago. If you guys were here. Tear out the SRs. Momentum. Yeah, I mean, it looks like it works good here. I personally don't. I don't. Gold's okay, but I feel like gold is like high. It's like way more manipulated than what's called than US 30. But yeah, I mean, I can see it working here. That's why I started trade gold a little bit, but I screwed up that one time, and I'm just not going to trade it anymore. But it does work. I mean, you can see right here, there's a double body, and if you take that for a short. Yeah. So, I mean, yeah, it does look like it works pretty well, B. See another double body. I don't know if you take it in the direction of trend, but I mean, just looking at it right here, it does work pretty well. It's another one right here. I don't know how much you shoot for. I'm assuming like 500. Full TP right there. Another one right here. Actually, this one hits stop loss. I don't know what your TP stop loss would be. But yeah, it does look like it works. I don't know what the sweet spot is because I don't trade. Yeah, exactly. B said I have trouble picking TP and stop loss for it. Oh, I've been trying out the stop loss at previous swing higher lows, TP at 2R. Yeah, no, you can do that. The problem with gold though is that it moves so erratic that like, so for example, if you were to take a trade right here, right, your swing high is like way over here. So it's kind of hard to go for a 2R, right? Not it doesn't happen like that every time, but so for example, right here, if you were to take a trade right here, swing high would be there. You go for 2000. It does work, but if you get caught where your entry's like down here, swing high's like way up here. I mean, it looks like eventually it would hit, but it's it's a high stop loss. Yeah, B said gold always feels smooth to him compared to US 30. Yeah, everyone's different. Like for me, US 30 is super smooth because I've been trading US 30 for like 5 years now, every day live. Trading live has forced me to become a better trader, and it's forced me to become more disciplined because I can't mess up on live, or you guys will lose, right? So yeah, for me, I think US 30 is just smooth because I'm so used to it and I'm confident in trading it. The same with other people. Some people like gold because they think, they're more confident trading that as well. But realistically, if you put gold and US 30 right next to each other, so let me just turn this off so you can see the comparison. It's the same thing, right? So I mean, it just depends on how you presume it. So if you look here, it looks like US 30 is actually a lot smoother. So it goes down, retrace, back down, retrace, and then down further. With gold over here, you can see how choppy it is, right? So this is the way I see it, like, because it looks just so choppy to me. A lot of consolidation right here. Drop back down, consolidation, drop back down, consolidation. It's not like a back and forth movement like US 30. There's a lot more consolidation for gold. So, I mean, if you can catch the breakouts for gold, then yeah, you could do really well with it. But if you get caught in this consolidation, you can get really screwed because it consolidates a lot compared to US 30. Yeah, B said I typically have trouble with US 30 because if I screw up the negative RR, it affects my psychology. Yeah, no, and it does. It really does. That's why it just really depends. Like if scalping is not for you guys, then you guys should not be scalping. But I'm like a prime example that scalping does work because a lot of people don't like scalping. They're just not good at it. And there's nothing wrong with that, right? Not everyone's a scalper. Like same with me, I'm not really good at swing trading because I don't like being bored on the charts all day. Yeah, you can go for bigger moves, but I can make the same amount of profit trading on a shorter time frame for like an hour a day. So everyone's different. So what I recommend is to try everything out, see what fits your trading style, and then master that. Because I've always been a scalper. The only reason I went to intraday trading was so that I can sell signals, right? My signals were good, but I personally didn't like it. Like I knew how to trade intraday and I knew how to trade swing trading, but I didn't really like it. Like I felt like it was a job, like I was doing work. With scalping, it's like fun to me. It's like a game. So I actually like doing it and it doesn't really stress me out. So yeah, I mean, that's my recommendation. Like you guys can learn how to trade so many different ways, but if you don't like trading that way, I don't recommend continuing to trade that way because you're just not going to be happy trading and you're going to give up or you're going to make mistakes and you're going to blow your account. So if scalping's for you, great. You're going to be doing well with K2 or Kodi Kai for a long time. But if you want to intraday trade, you can still use the same indicators. You just got to use them on different time frames and different assets. So, all right, guys, is there any other questions? If you guys have any questions, feel free to put them in the chat. Otherwise, I think I've answered all the questions so far. It is 3:30 right now, so we've been on this mentoring session for about an hour and a half. And I'm okay with like staying longer. It's just if we have any questions, we can cover that. Otherwise, we'll just wrap it up for the day. So let me hang around for a little longer, see if anyone has any questions. And then if not, we will just wrap it up for today. But hopefully everyone got their questions answered. If you guys asked a question and I didn't get to it, just pop it back into the chat. B's asking, do you recommend the 5-minute daily counter trends? I know the 3-minute works good. Saw you mention the 5-minute a few times. So I personally don't like applying the daily on the 5-minute. At least not right now, because right now the market isn't moving directional. So like that strategy in general, like the breakouts, the daily entries, the variations, the intradays, the pivot scalps, all of those strategies, they don't work very well during choppy markets, right? So I personally don't like it very much right now, but when the market is moving a lot smoother, see over here real quick. Like I think today's would have lost, right? Let's see. Yeah, so today's right here would have lost. It's like hit or miss. It's right now it's hit or miss. If you go back to like, let's go back to like January or something, if I can go back that far. Because the thing is, the market hasn't really been moving directional. And today was just a bad day too because of the news and stuff. But I can't go back that far. So the farthest I can go back here is June, I believe. Let me go back a little further. Actually, no, I can keep going. I just want to go back like pre-summer. All right, so like April here. Let's just go to a random day. So random day right here on March 28th. All right, so here's an entry right here for a counter trend. This is pre-summer. Trend here is down. This entry here is for a buy. So since the trend is downward, you would go for a sell instead of a buy. You take a sell there, full TP. This is on March 28th. Let's go to March 29th, the next day. All right, same thing here. So let's see if I can find one here. So here's the thing with these, like, I don't know if there was anything going on the 29th, but this here would be a counter trend and it would have lost. I mean, I could check the calendar if I really wanted to, but this here would have been a loss. So I don't really like the 5 minute. I like the 3 minute, 5 minute, not so much. The thing is, John put his spreadsheet on the chart too. So he kind of broke down. Let me see if it's still on there. He broke down like the win percentage. And I don't think the 5 minute had a good win percentage. Real quick. Yeah. This is just a 3 minute. I don't know if he had one for the 5 minute. Yeah, actually, I don't know if he had a spreadsheet for the 5 minute, but for the 3 minute here, I mean, the win percentage is pretty high. Let's see if I can find another one here. Let's see. So B's asking, would it not be a buy since it's counter trend? Yeah. So the way that strategy works is you're just doing you're trading in the direction of the trend. So if the trend meter down here is green and you get a sell, then you're going to buy. Vice versa, if the trend meter down here is red and you get a buy, you're going to sell. But if you get a sell and the trend meter is red, then you take it in that direction. So does that make sense, B? It's either counter trend or I mean, realistically, it's trend. So you're trading the direction of the trend, but if you're doing opposite, then it'd be counter trend. You just call it counter trend, but realistically, you're trading with the trend. It used to be one of the requirements. I don't know if we still apply it, but it used to be one of the requirements when we applied the daily, like the original daily. 10-minute daily. Yeah, because you confirm the overall bias, which would be the trend. Like this right here, for example. This would be a buy. And it looks like I would have lost too. Yeah, I don't like the 5 minute very much. 5 minute was never like, it's never been one of my time frames that I like to trade. The reason why I don't like the 5 is because a lot of people trade on the 5, right? I typically don't like trading on time frames that a lot of people use. So for me, I like to use the 1 minute, 3 minute, and 10 minutes sometimes. The 5 minute is common for like a lot of other scalpers. And I don't want to get mixed up in like their analysis, because the thing is, if they're analyzing something and it aligns with yours, it just makes you become prey for the market makers, right? So if they're identifying a sell, you're identifying a sell, you take the sell, market makers spike it the other way, you're gonna get screwed. So like for me, I typically like to do what majority of people don't do. So I don't see a lot of people trade on the 1 minute. So I like trading on the 1 minute. Same with 3 minute. I don't see anybody ever trading on the 3 minute. I think we're like the only ones, but the 5 minute I do see a lot of. So yeah, if you're asking me personally, I don't really like the 5 minute B, but it does work. So I wouldn't necessarily knock it. I think you would probably just need to apply. So here's another thing. I didn't turn on the sessions. So we might have had some entries here that would have lost, but it was probably like near a red flag. We just, we can't fully analyze it unless we rewind it to that same exact time. And that goes for like the winning trades too. Like some of the winning trades here, we might be taking them, but realistically, they might have been skipped. So like right here is a sell. And that would have been a full TP. But if we were played to this point in time, I don't know if there was news or anything, but the one thing that we would look at would be the session. That's like one thing that we can confirm here. And you can see how the sessions is right here. So I probably wouldn't have taken this trade, even if I saw it, even though if it was a winner. Or maybe I would have taken it, but I would have exited before I got to the sessions down there. So yeah, I mean, if you want to play around with it, feel free. Just make sure to confirm the red flags. I think the red flags would definitely avoid a lot of the losses that you might have run into applying the strategy here. So, all right, guys, I think that's it. You have any other questions, B? If you do, feel free to drop in the chat. Otherwise, let's wrap it up. Let's see. B said, yeah, I'll do some back testing and give it a try and demo. Thanks, Sean. Yeah, definitely. Yeah, just keep in mind to look at the red flags. Ever since we started looking at the red flags, it's helped us avoid a lot of losses, right? We probably missed out on a lot of wins too, but we did avoid a lot of losses. So the main key here is to stay consistent. It's not really making a lot of wins. It's really just avoiding as many losses as possible and stacking up the wins as they come. So, all right, guys, I think that's it for now. If you guys have any other questions, feel free to email me or message me on Telegram. I still got a lot of work to do with this whole rebranding process as we wrap everything up. But for now, I think that's about it. So if you guys have any questions, feel free to reach out. Otherwise, I will see you guys back here tomorrow morning for the next live session as we kick off Thursday's trading day. So, all right, guys, have a great rest of your day.